So this is the report card from the IMF on the U.S., and the administration's policies are not getting great marks here. On tax cuts, the IMF says they will have a modestly positive impact on the economy, same with regulation, deregulation, a modest boost to GDP, but it is the budgetary harm of the Trump policies that has the IMF worried, saying the government deficit will rise to 4.5% of GDP by 2019. That's double what it was just 3 years ago, and that will elevate risk to the U.S. and global economy. It'll also exacerbate what the IMF calls unsustainable public debt to GDP. That number is set to climb past 90% of GDP by 2024. And all of this, according to the IMF, will make life very difficult for the Federal Reserve, saying Trump's policy raises the risk of faster inflation and will cause the Fed to move faster than the market thinks when it comes to raising rates. That will create, quote, disruption and volatility in financial markets. And if that wasn't enough, the IMF here is criticizing the temporary nature of the tax cuts, saying it creates uncertainty. Also says the tax cuts help the rich disproportionately. Finally, not surprising here, a rebuke of the trade tariffs, saying they create an adverse effect for the U.S. economy and for that of our trading partners. They hurt global supply chains and U.S. multinational companies. Guys, Christine Lagarde, the head of the IMF, is making some comments now in a news conference on these findings, probably trying to tone it down a little bit, because they do say the U.S. economy is set to grow very fast. And we're going to have the longest expansion on record over the next year. But the longer and medium-term impact of some of these Trump fiscal policies on the debt, of course, and on trade is going to make it a little bit more painful.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.